Hey everyone, welcome back to Corporate Decoder. Today we are diving into a biotech company's filing, and let me tell you, it has a couple of financial surprises, some good and some that need a bit more investigation. Prepare to decode the numbers. We are looking at an 8K form from Nuvation Bio, filed on March 6, 2025. An 8K is a current report company's file to announce major events. Think of it as an "oh, by the way" to investors about something that just happened. It can range from announcing financial results to a big change in leadership or even a significant legal battle. In this case, Nuvation Bio is sharing their financial results for the quarter that ended December 31, 2024. So, we're getting a peek under the hood at how the company performed during that period. They did this through a press release, a formal statement shared with media. We can see the link to the press release here, so let's dive into it. Okay, here is the press release that will give us a lot more details. The title of the press release is Nuvation Bio Reports Fourth Quarter and Full Year 2024 Financial Results. That sounds about right given our previous document. Let's start with a quote from David Hung, the founder of Nuvation Bio. It's always a good way to understand the company's perspective. He highlights the progress they've made with their clinical programs and mentions upcoming milestones for 2025. Essentially, he is setting the stage and painting a promising outlook. One key program Dr. Hung mentions is their NUV-868 for advanced solid tumors. It is always worth noting the pipeline of drugs a company has in development, as it represents the future potential growth drivers. He then calls out NUV-1126 for advanced cancers. These are just two of their key assets. A pipeline is very important for biotech companies because it is very risky to have most of your eggs in one basket. Let's look at the actual financial numbers. Here we can see some of their key expenses. Research and development is by far the largest expense. This should not come as a surprise since biotech is by definition extremely research intensive. Then we have general and administrative expenses, which are mostly the costs of running the business. This includes things like salaries for non-research staff, rent, legal fees, etc. Next up is net loss. Unfortunately, the company had a net loss of $67.5 million for the quarter. Not a great number to see, but it's not super surprising for a biotech company of this nature to be burning cash. A company needs to be profitable, or at least close to it, to instill confidence in investors. Finally, the company had $721.8 million in cash equivalents, and marketable securities as of December 31, 2024. That's a decent chunk of change. The fact that they have that much cash on hand means they can continue funding their research and development programs for quite a while. Generally, biotech companies need to raise money in the capital markets, either from debt or from stock dilution. The more cash they have on hand, the longer they can go without having to do that. Now let's dig deeper into the numbers. This table compares the fourth quarter of 2024 with the fourth quarter of 2023. Research and development expenses went up from roughly $46 million in 2023 to almost $61 million in 2024. That is a significant jump. It could signal they are investing heavily in their pipeline. General and administrative expenses also increased, but not nearly as much. Still, an increase is not ideal for any kind of expense. The net loss also increased from about $52 million to $67 million. This is not great news, but it is worth keeping in mind that biotech companies often have large losses during their development phase. They are investing heavily in research and development, and it takes time for these investments to pay off. Here we have a comparison of the full year results for 2024 and 2023. Once again, R&D expenses went up. Roughly $205 million in 2024 compared to $156 million in 2023. G&A also increased, but not nearly as much in terms of total value. Net loss for the year also increased. Around $237 million in 2024 compared to $185 million in 2023. Again, that is not ideal, but can be explained by being in the development phase. Let's examine the liquidity and capital resources. This section discusses how the company manages its cash and funding. The company states that it believes its existing cash equivalents, and marketable securities of $721.8 million will be enough to fund operations for at least the next 12 months. This is an important statement because it tells investors that the company is not expected to run out of cash in the near future. Alright, having reviewed their numbers, here is my take on Nuvation Bio. The company is burning cash, but they have a decent amount of runway thanks to their existing cash reserves. They are investing heavily in research and development, which is a good sign that they are serious about their pipeline. The increasing net losses is not ideal, but it is also not unexpected for a biotech company in their stage. What matters most is whether their investments in R&D will pay off in the long run. Overall, Nuvation Bio seems to be in a decent position. They have a promising pipeline, a strong cash position, and a clear focus on research and development. However, they need to start showing some progress in terms of getting their products to market. That will be the key to their long-term success. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more corporate deep dives.